Good morning, traders from each and every part of the world that you are joining this series of the Daily Money Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various financial assets. Now, in today's video, being the 5th day of the third month of the first quarter of 2025, beg your pardon, we are experiencing somewhat of what we would call a market crash, where we see various asset classes attempt to be on a bearish momentum. We're going to be looking into that and also mentioning some of the factors that could be causing this market crash. Also, we have had quite a myriad of high impact news happening in the week, and we have been mentioning it every time on this series of the Daily Money Market Call. And today, being on 5th, we have had data coming from Australia hitting the market during Sydney session with a gross domestic product, which tells us the general economic health of the Australian state, which came out a mixed reaction, but the gross domestic product came out positive, slightly higher than expected, which is meaning bullish for the Australian dollar. Moving into the week, today we also have automatic data processing employment change, which will tell us the number of people employed or otherwise in the private sector in the United States, which culminates. We also have to get an indication of ISM services purchasing manufacturing index. These two high impact data from the states would tell us how the labor data is doing, how the labor industry, that is the ADP employment change, and also how inflation is doing for the ISM services PMI. Later in the week, that's on Friday, we are going to have the NFP, which we have longly awaited, which will be hitting the market on Friday, New York time. Now, for the above that I have mentioned that all our eyes will be focused on, higher than expected reading would mean bullish for the dollar, and lower than expected would mean bearish for the dollar. We see also we have got high impact news from the Eurozone. 20 countries are using the euro as a medium of exchange. Will be giving us an indication of how the economic health in that part of the world is doing. But of late, the euro has been quite recovering, and we're going also to be discussing that. A higher than expected reading again would mean positive for the euro, and a lower than expected would mean negative for the euro. Having that in mind, today we observe that the market has been quite crashing when we are going to look at a number of asset classes, and this would be attributed to the famous letters T, Trump's tariffs, which are causing a lot of uncertainties in the global markets, which is causing the market to be crashing. We're going to be looking at that, and this is on Mexico, tariffs on Mexico, and tariffs also on Canada. We expected the leaders of this country to try and mitigate that particular scenario, but it seems no deal was placed on the table, which would mean the Donald Trump administration will carry on with the tariffs. Now, let's share the screen to proceed with this to see how this is happening. Beautiful. Beginning from gold, gold seems to be holding off from the area of interest that we indicated yesterday. This one is on 2865.55 and seems to be getting bullish. Gold seems to be enjoying these particular uncertainties, which are causing fears and tension in the global markets and causing the continuation of the already established bullish trend that we are experiencing. Okay, so having that in mind, we have time without numbers mentioned that this precious metal under the classification of commodities is affected directly by geopolitical events, or what we regard to as fundamental analysis, economic and geopolitical events. Now, when it comes to commodities, it is important to remember that geopolitical events tend to have a much more weight, and geopolitical events which causes fears and uncertainties which give investors and traders sentiments. They inform the sentiments. Now, this particular situation that we are in at this time of man's history, where we see trade wars escalating, which are brought about by the United States tariffs on her neighbors, is causing fear and tension, and that is why the demand of gold is increasing, because investors, central banks would rather have their money in something safe, and gold has provided that safety measure as compared to other asset portfolios. This will cause the demand of gold to proceed in the upside. However, it is important also to remain on a risk on approach as you get in long for these particular trades, and this is because we also have other geopolitical events which might trigger gold to attempt to proceed bearish until possibly to hit the 2786 area of interest, so that we observe the reaction from that. These geopolitical events would cause gold to reduce in its demand are possibly the alteration of the tariffs by the United States if they go back to negotiate the negotiation table, and also peace talks in in Eastern Europe between Russia and Ukraine. All these factors we might want to keep an eye on. Before I proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean you could access this YouTube video later on our YouTube channel at HFM Kenya. Like, subscribe, and click on the notification button and share. And when you like it, it gets to improve on our algorithms, which makes us get to more people. And this benefits more people by having a positive impact on their education in regards to the financial markets. Moving on swiftly, let's see at indices, beginning with US 100 or NASDAQ. NASDAQ or US 100, which is majorly composed by between 40 and 50 tech companies, well-established tech companies in the US, seems to be attempting to be bearish. We retested the 21,012.52 area of interest and bounced off. This crash is caused again by the uncertainties. Now, these uncertainties is having investors withdraw their money or transfer their assets to other much more considerable safe assets, as compared to stocks which are directly impacted by government policies. And in this Donald Trump era, we have seen a shift from monetary policy, which was a role by the central banks, to fiscal policy, where we see government intervening directly, which affects various financial assets. A scenario that we are likely also to see on S&P 500, which gives a much more overall view of the United States economy, because these are both established and also penny stocks put in together in a basket we refer as S&P 500 or US 500. A scenario that we are likely to monitor to see how far this particular bearish trend will proceed. Will we come and print below the 968 area of interest and bounce off, or are we having a reaction close to this area of interest to keep on printing to the downside, to the upside? This would give us investors and traders a much more cautious approach as we monitor the situation, because we currently see the shift from monetary policy to fiscal policy brings about much uncertainty. Unlike gold, this particular stocks and basket of stocks in the Americas region, with concentration to the United States basket of stocks or indices, is somewhat not giving us much more needed clear market direction, which will have us approach the market with a risk on approach. But in case you want to attempt to get into these markets, kindly observe risk management, because the volatility at this time in the market, we could see this sharp drop from up here, bouncing off from this area of interest, breaking, not retesting, breaking the second zone and retesting. And now we see yesterday printed with a doji, which is indecision, which kind of gives us a feel about the financial markets, to give us a much more cautious approach. Moving on to oil, let's finish up with commodities and indices, then we get to nice oil. This is AUD no, sorry, oil. US oil is approaching the $67.37 per barrel, as we anticipated from above here. It actually retests, it has tested it. Want to see the reaction of this. Will it break and proceed below? Yes, but we are anticipating a slight correction or retracement for price to proceed, printing on the downside. And we see the administration of the United States, which we are going to be mentioning much more in the coming years, because of the approach of the Donald Trump administration in influencing the global markets, which affects the financial markets, which is our concern. We know that the prices of oil have been decreasing due to the pressures of the United States on oil producing countries, or OPEC, to reduce the prices of oil so as to mitigate the war in Eastern Europe. How is this happening? Because Russia is an oil producing country, and it seems to be improving in its economy, holding on to this, what Trump calls the oil, the gold of the desert. Now, if these prices decrease, this would mean that the Russian state would not be exposed to much more needed resources to proceed with the war, which would stop the war. Now, we see prices retesting, would be observing to see the retracement and price to attempt to break this area of interest at $67.36 per barrel of oil, as we monitor the situation. So for short positions, when the retracement gets to area of interest, would be our concern for us to continue riding this bearish momentum, which we called up from the 80.92 area of interest. Going on to currencies, beginning with Australian dollar, United States dollar. The positive data we have had from AUD is causing the Australian dollar to attempt recover from the United States dollar, and this is because of the positive growth domestic product, which came out as 0.6%, which is slightly above the expected at 0.5%. That is a positive 0.1%, which is causing the Australian dollar to print bullish, recovering from the United States dollar. We'll be monitoring this when it gets to key levels where we see prices reacting. For example, if I was to draw one here, connecting more than 3 price points, more than 2 or 3 price points. This is a minor area of interest. The major one is up here. We'll see how it reacts from there, but as we speak, we are facing a retracement due to the recovery. We'll be monitoring today's data, labor data, and also inflation data from the United States to give us a much more informed bias, so that we get in on a risk-off approach. And this is going to be the automatic data processing employment change, or the ADP, which tells us how the private industry in the United States is doing in regards to the labor market. Are we having more people employed in the private sector, or are we having less people? More people would mean positive for the United States. Less people would mean negative for the United States. We'll be monitoring that. We also have ISM PMI, which is an inflation data. Also, higher than expected reading would mean bullish for the dollar, and a lower than expected reading would mean bearish for the dollar. Now, as a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. Kindly do your due diligence and remember to observe risk management. If this is your first time to interact with the financial markets, attempt to reach to your mentor who has led you to this chat room, or also get to register for an account. Visit hfm.com, attempt to register for an account, which will make you fill in your details, and our experts will get in touch with you to help you proceed with the account registration until you get to the investment stage, so that you start your journey in the financial markets. But if this is not your first time but you took a break, also consider getting in back in the financial markets, because in the next 4 years we are going to have much more needed high market volatility, and the HFM will be offering that platform for you to participate in the financial markets with favorable trading conditions. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Take care and God bless.